Hello and welcome to The Firm. On the show this week, why is Etihad paying Jet a mouth-watering premium for a deal that offers no control? And Mumbai's traders take to the street to protest against LBT. Our top story of this week is the top deal of this year so far. In September, the Government of India announced a change in policy allowing foreign airlines to buy up to 49% in an Indian carrier. Soon enough, there was speculation of UAE's national carrier, the Abu Dhabi-based Etihad Airways' interest in India's Jet Airways. After 5 months of speculation, the deal was finally struck this week. Etihad will buy 2.72 crore Jet shares at 755 rupees a share. That's a 32% premium to current market price via a preferential allotment. This will give Etihad a 24% stake in Jet, just 1% shy of the substantial acquisition trigger in the takeover code that mandates an open offer. Besides this $379 million, Etihad will pay another $150 million to purchase a majority stake in Jet's frequent flyer program, which apparently is held via an unlisted subsidiary of Jet Airways. That's the information we have from sources. And also $70 million for Jet's Heathrow slots. So that makes it a total bill of $599 million. And Etihad is also reportedly committed to providing Jet another $600 million in low-cost finance. Now, within hours of this deal being announced, news came in that India and Abu Dhabi, or rather India and UAE, have signed an aviation bilateral deal that increases weekly seats between two countries from 13,300 to 50,000. This announcement transformed the Jet-Etihad deal from an alliance to an industry game-changer. To talk about this deal, less the commercial aspects and more so the legal aspects arising from that, I'm joined today by Kapil Kaul. He's CEO of South Asia at the Centre for Aviation, or CAPA, and Ravi Nath, Chairman and Managing Partner of Delhi-based law firm Rajinder Narayan & Co. Mr. Nath is amongst India's foremost aviation lawyers. I also have comments coming in from Burgess Desai, Managing Partner at JSA. So, gentlemen, a warm welcome to you to The Firm. Let me start with the very first issue that I want to talk about, and that is the issue of control. It seems to me, if you add up the figures, Kapil, that $600 million in investment, that's a 32% premium to current market price. And if you look at the run-up in the stock ever since this news broke out many months ago, that's a much bigger premium than even 32%, and another $600 million reportedly in low-cost financing. What investor puts over $1 billion on the table and settles for just 24% without any control?
America, from a structuring perspective, I think they will have to ensure that there is no control. But there are ways and means to move around that structuring objective. So my assessment is that, as you said, that it's a big deal, game-changing deal. Lot of money is being put by Etihad. You would see a total top management change. You would see some board changes. You might see Mr. James Hogan coming as a vice chairman. You might see two more additional board representations. They might bring their own people at the top level. So this isn't a deal which is just about 24%. But from a structuring perspective, it looks that the control would be in the hands of Jet Airways. But I suspect that Etihad would have much more control over Jet Airways going forward.
All right, depending on how you interpret control, being able to put people in key management positions is also an element of control. Mr. Nath, how do you look at the control issue that this transaction throws up, and whether an investor like Etihad, after putting so much money on the table, would be happy with just 24%, or whether it would have worked in several more rights and protections into that shareholder agreement to ensure it's getting its money's worth?
Certainly. The first thing, of course, is to remember that this is the first step. 24% probably might expand to the highest limit of 49% in course of time. However, to begin with, perhaps they would do what most shareholders in their positions do, that is, have a shareholders agreement with certain powers vested in them. Power of veto is one such: appointment of top management, a certain amount of veto powers on financials and and business ventures and so forth. These are a few things which are normally provided in shareholders agreement.
I'm curious to know how SEBI will look at all of this and whether it would amount to control in the eyes of SEBI or not. And that's the question I put to Burgess Desai, managing partner at JSA. I asked him whether he thought it was unusual for a transaction of this nature to take place without any control in the hands of the foreign investor.
Well, it's a bit rare, all right, in the sense that, as you said, they have pegged the threshold limit at 24%. So voting rights wise, they don't have to make an open offer. But if SEBI comes to the conclusion that irrespective of the voting rights, they are exercising control directly or indirectly over management or policy decisions of the airlines, then they would nevertheless be required to make an open offer. Now, as far as the way SEBI interprets this, that there was a decision a few years ago where SEBI has held that even veto rights or affirmative action rights, which means essentially that certain strategic management decisions cannot be taken without the consent of the investor, are also indicia of control. Now, this SEBI view was challenged before the Securities Appellate Tribunal, which in the case of Shubhkam, if you recollect, held that such veto rights by itself does not constitute control, and therefore there was no need of an open offer. Now the matter went to the Supreme Court, and when it reached the Supreme Court, the matter was settled. However, SEBI undertook this settlement on the basis that the Supreme Court held that this particular judgment of SAT in Shubhkam will be of no value as a precedent. So it is not good law today. So in other words, it is still open for SEBI even to say that negative or affirmative voting rights or veto power to block any strategic management decision is still an indicia of control. Now, whether SEBI will do that or not remains to be seen.
I just wanted to add that normally in such transactions, it's not necessary that the management would be coming from Etihad. There would be a management change for sure at JET. There would be a lot of changes at the board level. But you not necessarily get people who are currently engaged with Etihad.
So that would make the determination of control an even more difficult thing to do, because it's not as if they're going to supplant an Etihad person on the board of or the management team of JET. It might just be somebody that Etihad has approved.
I don't think there will be a problem of control. They would have got that structured, and it will be designed in a manner that there will be no control issue.
All right, then let's talk about the issue of bilateral rights, because interestingly, on the very same day that JET-ETIHAD made this announcement, Kapil, later in the evening, we had the news coming in that India and UAE had decided on this bilateral agreement that more than double the seats available between two countries. In your assessment, how important a part does that play in the success of this deal, or is it at the very soul of this deal, without which Etihad would not have paid such a fantastical premium to JET?
I completely agree. We've always believed that the bilateral and enhanced bilateral are fundamental to this deal, and are fundamental to the valuation that JET has got. We also believe that if the bilaterals would not have been approved by the government, the deal possibly could not have gone through. The deal and the bilaterals were almost structured very closely to each other. The deal was announced one day earlier, the announcement of bilaterals happened a day later, but the discussions have been happening prior to that. So the deal and the bilaterals are critically intertwined, and I think the valuation was largely dependent on the kind of bilaterals they have approved. I'd like to add one more thing. We have been always talking about the bilaterals that JET got, but Etihad is entitled to a similar bilateral, which would mean between them they have about closer to 80,000 seats, which will be used for a similar purpose, which primarily is to take India's traffic out of India.
All right, so I think Mr. Nath, Kapil has laid out how important this issue of bilaterals was for this transaction to in fact be struck. Now, let me again look at this from the point of view of SEBI. You have an investor like Etihad that is committing this investment based on one very important piece of information, which is the bilateral agreement. And ostensibly, one could say that they must have had considerable confidence that the bilateral agreement would go through for them to have announced this transaction. In a sense, that means they were privy to some information that only the two of them knew about, that is JET on the Indian government's behalf and Etihad on the Abu Dhabi government's behalf. Would this amount to having possession of inside information? I know this is a bit of a stretch of a question.
I'm not entirely certain whether this would tantamount to insider information. You know, these things have been talked about for a long time. Abu Dhabi certainly is going to become a very, very important place from JET's point of view, and therefore it may well move its hub there. And also you may have seen the press which said, was it today or yesterday, that the US has announced that it is going to carry out its immigration in Abu Dhabi. These are all very important factors which were kind of more or less known. But yes, I agree with Kapil that possibly if this had not happened or was not about to happen, maybe the deal may not have gone through.
Let's look at how the competitive landscape has changed on account of this deal. And Kapil, I come back to you for that again. You've mentioned how these bilaterals benefit only just JET and Etihad. What does that mean for the rest of India's airlines? What does that mean for Air India, for whom the UAE is a big market? Because I'm sure the CCI will be examining all of this when looking at whether this deal has an adverse effect on competition in any fashion.
Well, first of all, talking about Air India has had a significant improvement in their performance over the last 1 year. And they have cut down their losses from 7,800 crores to about 5,000 to 5,200 crores. And this comes at a wrong time for them, because this virtually changes the entire landscape for international operations out of India. Even if the government doesn't agree that this deal doesn't change anything for Air India, this deal is perhaps the potential of wrecking Air India completely. So I think the impact on Air India is very, very huge. As for the other industries concerned, I don't see a problem with the other domestic players. But I largely have one question, is that if there is a Qatar or a Emirates which comes and buys Fijet or Go Air and then asks for similar bilaterals on Qatar or Dubai, or Singapore Airlines buys any one of the domestic carriers, it will be difficult for the government to refuse the kind of bilaterals that they have given to Etihad. So I think it's a very strange situation. And I would like to add one more thing, that just about 3 months back we heard that the government was not very keen to give bilaterals to Middle East carriers because there is an imbalance in terms of utilization by Indian carriers. And maybe not because of this deal, but certainly something has changed that has basically changed their thinking about bilaterals with the Middle East carriers. And we had one problem, that we have a Singapore Airlines and a Lufthansa and even Emirates pressing for an A380 to India. And the difference between A380 and 747 they have allowed for Lufthansa is not more than 40 seats, depending upon the configuration. So for 40 seats, they said that is going to impact Air India. 380 is not being allowed to come to India because of Air India. And certainly we give 40,000 seats to one carrier. I don't know how anybody can explain. I am quite confident that this deal is a game-changing deal for Etihad and strategic renewal for JET. But I don't know what is the status of Indian aviation, given the fact that there are huge structural and fundamental problems, and this is it adds other complexities to it.
All right, so you put it very well, Kapil, and I know that you've also been raising the question in other discussions about the fact that shouldn't bilaterals be treated as a natural scarce resource, if I may call it that, or at least a natural resource, and a price be put to it, because eventually the commercial benefit of those bilaterals accrues to airlines. I'm going to, in the interest of time, move on to the final issue I want to bring up, and that is the Etihad investment of $150 million in JET's frequent flyer program, that's JET Privileges, which apparently, from what we understand, is owned by a separate subsidiary of Jet Airways. I know that, Kapil, this is not an uncommon occurrence in aviation deals, that recently Etihad also paid Air Berlin some $263 million for a 70% stake in Air Berlin's frequent flyer program. But my question has to do with valuation. How do we understand what that $150 million means?
Yeah, I think first of all you must know that internationally frequent flyer is bailing out struggling airlines. If it's Qantas or Air Canada, they're listed frequent flyer programs. They make more money than the airlines make. So JET has rightly done is hiving it off recently. I think they have recently hived off the frequent flyer program, and I guess it was in anticipation of what would have to happen in terms of an investment coming from Etihad. Yeah, it raises a question of valuation, and I think they will have to at some point of time disclose the basis of valuation, how much of revenue was accruing to the Jet Airways because of this when it was as a part of Jet Airways. Now it's hived off. Is there any monetary loss to Jet Airways, and what's the play going forward? But having said that, I think frequent flyer program hiving off the whole ancillary business is a game-changing business. It has a huge upside, and I think Jet has done the right thing by hiving it off and getting an investor at the very early stage.
All right, I want to play out what Burgess Desai had to say about the role of this $150 million investment in the frequent flyer program. Here it is.
So it's 150 million for frequent flyer miles and some 70 million for 3 Heathrow slots. That's an additional 70 million. So now this 220 million payment, I would think that if SEBI were to come to the conclusion that this transaction requires Etihad to make an open offer, if they were to come to that conclusion, then I think they ought to take into account whilst determining the offer price, not only the price at which the preferential issue of shares will be subscribed to by Etihad, but also perhaps take into account these two payments which are made, whether they were a part, an integral part, or they are inextricably interlinked in the transaction, or whether this is some kind of a arrangement by which the premium escapes the offer price. I think SEBI will certainly inquire and take these two payments into account in determining the offer price. Also, another interesting offshoot of this is that one reads in the newspapers that the promoters will be making an open offer for sale to the shareholders in order to comply with the minimum public holding norms. Now, if this were true, and if they were to make an offer at X price, which is much above the price at which preferential shares are issued to Etihad, this will really add to this cocktail of facts and make it even more interesting for SEBI to examine is that why is there this discrepancy between the preferential issue offered to Etihad and between the offer for sale made by the promoters to the Indian shareholders, and whether the equating factor is the frequent flyer miles or the slots.
All right, so that's another interesting twist that Burgess brought to the table. Gentlemen, I'm done with my scenario gazing, so I'm going to ask both of you for wrap-up comments. Mr. Nath, do you believe that this deal, the way it's structured and based on the issues that we've discussed, will have legal trouble in finding clearance?
It may well have some troubles, but I think it will sail through ultimately the way that it's structured. I don't believe that it's going to get bogged down. And of course, commercially, it's a wonderful deal for both the parties.
I don't see any regulatory clearance troubles for this deal. I don't see any competition commission challenges for them. I don't see virtually anything, even for the issue with respect to SEBI. Don't see any problem. I think they've already structured it. The question primarily is more fundamental, which is how we play and how we manage our sector.
And that's the policy issue that will endure. Kapil Kaul, Ravi Nath, Burgess Desai, thank you very much for joining me on this discussion and taking us through the various legal and commercial facets of the JET-ETIHAD deal. With that, let's take a quick break on the firm. On the other side, Mumbai traders take to the street to protest against LBT.